Ladies and gentlemen, good day and welcome to the ACC Limited Earnings Conference call hosted by ICICI Securities. This is to remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risk that the company faces. The company assumes no responsibility to publicly amend, modify, or revise any forward-looking statements on the basis of any subsequent development, information or events or otherwise. Please note that the duration of the call is for 1 hour. As a reminder, all participant lines will be in the mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kripal Maniyar from ICICI Securities. Thank you and over to you.
Thanks, Mike. Good afternoon and a warm welcome to everyone. On behalf of ICICI Securities, we welcome you to the earnings call of ACC Limited. On the call, we have with us Mr. Neeraj Akhoury, CEO India Lafarge Wholesale, Mr. Sridhar Balakrishnan, MD and CEO of ACC, and Mr. Yatin Malhotra, CFO of the company. At this point of time, I will hand over the floor to the management, which will be followed by interactive Q&A session. Thank you and over to you, sir.
Good morning. Welcome to all of you to today's investor call. We'll move to slide number 5. Our vision is basically to continue to be a blue chip company with the best performance benchmarks, strong brands, and leading in innovation and sustainability. We have played and will continue to play a significant role in nation building. On to slide 6. We have a strong belief that we need to leave the world a better place as compared to what we have inherited. ESG is at the heart of everything that we do. This flows right from our parent Wholesome. ESG is a part of our culture which permeates across all levels of the organization. Moving on to slide 7, the awards listed are a testimony to what we have achieved across the spectrum of the business. Moving on to strategic priorities, we quickly go on to slide number 10, which is basically accelerating growth, which is basically an update on the capacity expansion. Our expansion in Sindri is fully operational and it was commissioned in a record time of 9 months. Our expansion in Tikaria is also very near completion and it's way ahead of schedule. Our integrated unit in Ameta is also progressing well and it's on track to start producing clinker and cement by September, October of this year. Even our project in Salai Banwa is moving way ahead of schedule. Moving on to slide number 11. The other aspect of growth is fundamentally portfolio. We are constantly innovating to satisfy customer needs. We are also working strongly to develop sustainable products. Our premium product growth has actually been robust. It's close to 20% this year. And even the contribution of premium products to the overall trade sales has gone up by at least a couple of percentage points this year. With respect to sustainability, we had launched EcoPack this year during I think around February, March this year, and it's already started delivering about 15% of our concrete business. ACC in India is deeply committed towards developing and driving businesses of sustainable products going forward. Coming to slide number 12, we believe that concrete is poised for high growth. ACC is well poised to capitalize on the same. With respect to value-added products, it's really done well this year. EcoPack has also done well and has scaled up really well. We are focusing on developing other products to manage the consumer needs and to really drive the sustainability agenda of Wholesome and ACC in India. In terms of products and solutions, slide number 13, it's showing promise. We have doubled the turnover in FY22. We believe that this vertical has potential for strong growth going forward and we believe that it will become a significant vertical for us in times to come. Going on to slide number 14, we will continue to invest behind building ACC as the most durable and sustainable building material company in India. You have already seen some of the initiatives that we have taken, whether it's leave behind no waste, whether it's leveraging cricket for really driving the saliency of the brands, whether it's the premiumization agenda, or whether it's developing green products like EcoPack. As far as sustainability is concerned, slide number 16, we are the first company in India to sign up for the net zero pledge. All our action plans have been validated by SBTi. We have also been recognized as being industry leaders in the area of sustainability and innovation. Going on to slide number 18, this has actually been an excellent initiative taken by Holcim in India in terms of clearing up the rivers from plastic and leveraging them as alternative fuels in our kilns. Currently, this initiative has been fructified in Agra. Next on the line is Sundarnagar and HP in Himachal Pradesh, which is going to be on the river Beas. We are also in the process of talking to various other state governments to really expand this initiative across. In terms of slide 19, we've already discussed this. This again has been an excellent initiative in terms of managing waste, plastic waste especially, from stadiums where cricket matches have been held. We have basically cleared almost 2 tons per day in one of the matches in the India-New Zealand Test Series. And again, this basically is again used as alternative fuels in our kilns. Moving on to slide 20, we are very, very clear that we need to leave the world a greener place. So the entire PAR is going to move to we're going to be moving a significant component of our PAR mix to a clean and green mix. Our current existing, by 2022, we believe that 16% of our PAR needs will be met through clean and green, which is fundamentally WHRS and renewables, which is likely to go up to over 40% by 2025. We've also leveraged our global brand Holcim Geocycle to really increase the alternate fuels. The TSR percentage also is about 7% today, and we intend to take it up to about 15% by 2025. Even in terms of waste consumed, we've consumed about 11 million tons of waste this year, and we are planning to increase it by 50% over the next 3 years. Going on to slide 21, in terms of CSR, I think we continue to partner with the community in areas of livelihood and education and wash. Wash and hygiene as an area has really gained a lot more saliency during COVID times. Moving on to slide 22, as discussed, this is going to be a clear focus area for us. In terms of water positivity, we intend moving from levels of about 1.1 times water positivity to 5 times by 2030. We are also looking at reducing the quality of water consumed per ton of cement manufactured. Moving on to slide 23, ESG is going to be at the heart of everything that we do. We have made significant progress across all parameters as far as ESG is concerned. Now, our CFO, Yatin Malhotra, will take you through the next section. Yatin, over to you.
Thank you, Sridhar. Good afternoon, everyone. Welcome once again for joining this investor call. We are on the investor deck that we have released. We are on slide number 24. I'll take you through the delivering superior performance section. We move to slide 25. I think very clearly we identified people as one of the foremost pillars of delivering strong performance. Over the years, we have been able to create a strong team, and we continue to invest in the best practices around talent management, whether it is about growth, whether it's about learning, including opportunities with our parent Holcim, talent exchange program with Ambuja, succession planning, etc. We are committed as a team to diversity, not only gender but also ethnic diversity, and we take pride in the culture of transparency, trust, and integrity, along with delivering superior performance for the organization. I move to slide 26, and here we talk about the second pillar, which we believe very strongly in, and that is all about digitalization. We believe it is the biggest enabler of performance, and also, in future would be the biggest differentiator of performance between companies. We continue to work effectively on all the 3 value streams of the business, which is manufacturing, and where we continue to expand the plant of tomorrow journey that we have embarked on, basically to drive productivity and safety across our plants. The second pillar where we are doing extensive work on digitalization is logistic and sourcing, trying to become nimble in the way we approach the market. We have various tools for efficiencies, both in terms of cost and processes. And we have got digitalization initiatives around commercial, where basically the intent is to be more seamlessly connected to the customers, and better consumer experience is what we are trying to chase. And moving to slide 27, where we talk about our core flagship project. We have spoken about this in the past also. This is about Project Parvat, which is all about delivering cost efficiencies. We have been running this project, as I said, for the last 2 years, and it has given strong returns to the organization, again, across the value stream, in terms of whether it is about fuel cost optimization through sourcing or flexibility or reducing utilization, or whether it is about RM mix optimization. It is about network optimization, dispatches. One big input that we have had is the MSA that we enjoy with Ambuja that allows a lot of leverage in terms of cost, and also in terms of commercial excellence, in terms of revenue management and discount optimization, etc. And at the core, as I said, digitalization is the foundation on which a lot of these initiatives rest on. And then I move to slide 28, which basically summarizes how the year 2021 was for us, with the sales of almost 29 million tons, which is a growth of 13% versus last year. RMX, we sold 2.81 million cubic meters, a growth of 24%. A top line of 15,814 crores, a growth of 17%. EBITDA almost 3,000 crore, a growth of 27% versus last year. At EBIT margin levels, we were ahead of 15.2%, an expansion of 250 basis points, even in a very, very tough year. And a profit after tax number of 1,863 crore, a growth of 30% versus last year. Now I'll move to the next section of our presentation, which is economy and sector update. If I move to slide number 30, it just sort of gives a snapshot of the global sustainability trends. Well, slowly and steadily we see sustainability and decarbonization to be the buzzwords across industries, across the world. Whether it is driven by what consumers tell us, or whether it is driven by what the regulators tell us, what investors' messages we get, or whether simply basis the right governance standards that we need to have. This is the direction that we are very clearly embarking on. She just spoke about it. Moving to slide number 31, a quick a glance on the overall macroeconomy outlook. The GDP we saw last year, fiscal year 2022, was 9.2, and give or take, very clearly the GDP growth can be pegged at in the range of 7 to 8% in the years to come for a growth market like India. Inflation has been hovering around 5%, and I think with government's commitment to fiscal consolidation, I think the fiscal deficit also would be by and large under decent check. And if you move to slide 32, which talks about our view on the sectoral outlook, which will the key influences of the demand in cement. Clearly, with government initiative on capex and infrastructure segment would lead the overall demand, followed very, very closely by housing and industrial. Housing with a lot of money being invested in the housing for all schemes, and also with an expected good Rabi crop outlook. The housing demand is likely to be good in the coming quarters. And even if you look at the industrial and commercial sector, propelled by what the government is doing in the overall infra and capex, I think the industrial and commercial demand should follow suit sooner rather than later. And now I move to the last section of our investor deck, which is the performance review. If we look at slide number 34, Q4 was a tough quarter. The volume went down 3%. The net sales went up 2% thanks to the price increase. EBITDA at 556 crore was minus 3%, and overall PAT at 281 crore was minus 40%. We need to keep in account that last year Q4 we had a one-time gain in our tax expense line item. Slide 35 I'll skip. We have discussed that earlier. We go to slide number 36. So if we look at a full year level, net sales we spoke growth of 17%, EBITDA up 27%. Operating EBIT is up 40% versus last year, and we clocked an EPS of rupees 99.2 per share, which is again a growth of 30% versus last year. Moving to slide 37, which talks about the performance of the cement business in a per ton basis. And if you look at the full year 2021, the overall, if you look at the EBITDA from 875 rupees to a ton, we are around about 1,000, we are 988 rupees to a ton. So we have added 113 rupees to a ton as EBITDA, despite a very, very tough year that has passed by. The next slides talk about every single line item of sales and cost, and not dwell deeper into that, I think we can look at the slides and we can move on from that. So that pretty much brings us to the end of the investor deck that we had put out, and now we are open for questions. Kripal, over to you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Naveed Sahadev from Edelweiss. Please go ahead.
Hello.
Hi.
Yeah. So thank you first of all for the opportunity, and thank you for running us through the presentation slide by slide. My first question was about the first slide of your presentation, which starts with saying change the story, and also followed by that two cement giants joining hands to produce their strongest product yet, Bubbles. So two parts of this question. One, this Bubbles, do you see it as a CSR sort of an opportunity, or can we see some meaningful contribution to the P&L, as in from the bottom line perspective as well? And second is, then when we say two cement giants coming together, ACC and Ambuja, of course, so are we looking at more products in the cement space or building solutions together to make this entire MSA far more stronger than what it is being thought of or it is being communicated as of now? Thanks.
Okay. Hi, I think that's a good question. First of all, I think as I've said earlier, ESG forms the heart of everything that we do. We have a genuine intent to actually leave the world a better place as compared to what it was when we inherited it. That was the reason why we went ahead with this initiative of actually cleaning up the Mantola Canal in Agra. So the intent is not commercial. The intent is purely from an environmental standpoint to actually get rid of the plastic waste. It's incidental that the plastic waste collected from a disposal standpoint is used as an alternative fuel in our kiln, but that's not the primary objective. The primary objectives of this intervention is fundamentally to clear our water bodies of plastic waste. So, second question.
Do we see as more products coming together?
Yes. So the entire intent right now is to develop products which are more sustainable and greener. Proof of concept, you've already seen EcoPack, which has scaled up from 0 to about 15% of our volumes within a year. We will accelerate not only EcoPack, but some of the other sustainable and green products, both in the cement and concrete space.
Just to add here that most of these new initiatives are also coming to us due to our relations with our group Wholesome. So when you talk about Bubbles, this is what we have bought from the other countries of Wholesome into India, and we will continue to bring in new technologies as are being used in other countries, which can also help our own country to battle some of these topics, including in R&D. We will continue to work very closely with the group to bring in world-class products into India.
EcoPack is a classic example of a global brand which is basically being leveraged in India.
Appreciate. I just wanted to get a more color. As you said, it's incidental that this plastic waste could be used as a form of an AFR. So the current percentage of AFR, just trying to understand what commercial benefit that we can get from this CSR initiative.
So too early to comment on this one. Basically, the idea is to expand this initiative across various other river bodies, purely from the context of cleaning these river bodies of waste. So as I've said earlier, the next one is Sundarnagar in Himachal, and we are also exploring some of the other states. Answering the question in terms of TSR, independent of this initiative, Currently, the TSR percentage is about 7%, and we intend to take it up to about 15% by 2025, in the next 3 years. This will be a part of that, but the primary driver is not, in this specific example, is not commercial. It's more in terms of cleaning up waste.
Okay. Then, sir, thank you for this. Then my second question was about, again, this ESG aspect. And here I just wanted to understand on this waste heat recovery front, because every other company, the intensity of waste heat capacity per ton of cement, per million ton of cement is way too high. Like some of the companies with 45, 46 million ton cement capacities have waste heat capacities running to 30 odd megawatt, whereas we at almost 35 million ton of capacity, only 7 megawatt as we speak. Of course, I'm aware that we are pursuing waste heat at some of the locations, including the new Amitha. But it will be really helpful to understand what's the outlook here in a milestone fashion, that in 3 years, can it go to 100? What is the latent opportunity? Can we have a total of 150, 200? Some number specific things will really help. Thanks.
Good question. See, currently we are at 7 megawatts. Our immediate milestone for 2022 is about 45 megawatts. And by 2025, we intend doubling it. So we should be anywhere in the range of 85 to 90 megawatts of WHRS by 2025.
And what would be the latent opportunity, as in on the current total capacity, how much can we take this overall?
So this will be roughly, of the total power consumed, this will be 90 megawatt would roughly be about 25% of the total power consumed by 2025.
Right. Thank you for this. I'll join back in queue. Thank you.
Thank you. We have the next question from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Good afternoon, everyone. Thanks for arranging this call, and I think such calls are very useful for the overall investor community. So it would be a very humble request if we can have such calls more often, like every quarter, like most other companies do. Moving on to my question. First question is on Project Parvat. Is it possible to quantify some of the benefits that we have already realized? And also in the coming years, what sort of benefit are yet to be realized? And also if we could bifurcate into few heads, it would be very helpful.
So hi Sumangal, this is Yatin. Firstly, to your point of the quarterly call, last year we said that we will continue with this annual, investor calls. We take your input in terms of quarterly calls. Regarding Parvat, Sumangal, I think I mentioned that it is a flagship project that we run in the organization. This is the war cry against which the entire organization come together. Across the value stream, across all functions, we run this. In terms of value, we had earlier given an estimate that roughly 200. This was roughly a year and a half back. We gave that estimate. What we have already. We started the journey in 2019. In the last 2 years, the total efficiencies that we have been able to flow into the P&L is upwards of rupees 300 to a ton. Having said that, a lot of projects are still underway. And if you were to take, there is no outer limit of a number, but there's definitely in a few more semesters to come, another 100 to 150 rupees to a ton is something that we're looking at. But this is again, as I said, there is no full stop in this journey. So we will see as it comes.
I understand. Thanks, Yatin. But is it possible to share some heads under where this remaining 150 to 200 rupees could come in from?
So again, Sumangal, there is no single line item that would bring, a big chunk of 100, whether we talk about our plants, starting from reduction of clinker factor to fuel flexibility to sourcing to, higher TSR to, a better raw material mix, geomix optimization, MSA. So we have put a number in front of us. We are chasing that number. It is broken into many, many smaller pieces. Every piece is a project that is being run in the company, and that is the way we are driving, Sumangal.
Understood. That's very helpful. Second question is on our slide 12 on the RMC business. We've written that we have aggressive growth plans there and also plan to scale up some global products. Is it possible to share, I mean, what is the existing performance and what are our growth plans over the coming years?
So currently we have close to 80 plants. Because of COVID, in the last 2 years, we went a little, our intent was to be a little careful in terms of expanding plants. Now that hopefully the pandemic is past us, the intent is to basically double the number of plants over the next 3 years. So we strongly believe that concrete is poised for high growth, and our strategic intent is to make sure that ACC becomes the concrete company of India, which means doubling of plants in 3 years, improving profitability, and a dramatic increase in the contribution of green products to the overall mix. So it's clear that this is going to be a growth engine for us in the next 3 years. So as I have said, we'll be more than doubling the plants over the next 3 years. And in terms of profile of cities, so we were earlier present in the top 15 cities. The idea is now to expand it to the next 50 cities in the country.
Understood. And what sort of investments and return do we look into this business?
So, Sumangal, this is Yatin again. Investment, unlike a cement plant, RMX is not a very high capital intensive plant for us. So the returns typically are high. It's more about, the ability to drive demand and be present to make the right supplies. So it's a high return business for us, and as we expand, it should have more positive contribution in terms of the returns that we generate for our shareholders.
Okay, understood. I have a couple of more questions regarding the quarter, but I'll join back the queue. Thank you so much.
Thank you so much.
Thank you. We have the next question from the line of Ashish Jain from Macquarie. Please go ahead.
Hi, sir. Good afternoon, and thanks for the opportunity. Sir, my first question is, on ESG. If I look at ACC on carbon side, we are already the most efficient player in India, and we have a fairly aggressive target of, reducing emissions. So I want to understand what is the roadmap to achieve that, and what is the contribution or the support we are getting from the parent, on this front?
Okay. No, so I think we've clearly, as I said, not only have we signed up for the net zero pledge, but we also have milestones till 2030 clearly listed out. So very clearly listed out across various elements. So, for example, we have an intent of reducing it's broken up across elements as far as these various scopes are concerned. And we are basically leveraging the parent company very well, whether it's in terms of developing green products, whether it's in terms of looking at alternative ways of reducing clinker, whether it's in terms of leveraging our global brand Geocycle to dramatically increase the contribution of TSR or alternate fuels to the mix. So we have clear milestones across, and as I've just given you some examples, we are also looking at leveraging Holcim across the entire value chain to really bring down the carbon dioxide emission, whether it's products, whether it's technology in plants, or whether it's leveraging Geocycle as a brand to increase the usage of waste in our kilns.
So, sir, are some of these technologies readily available with Holcim, or do you think each plant, each country will be very different on this journey?
So in some cases it could be plug and play. In some cases we pick the basic concept and adapt and modify to local conditions. Yeah.
So my second question, is on the premium product thing. If we see in the last 2-3 years, pretty much most of the large players have started talking about, premium product and all. So I had 2 questions there. One, can you just help me understand how are we differentiating us versus others, if that is relevant? And secondly, what is the market feedback on this? Is the consumer cognizant of it, and is it translating into better realization, better profitability, or is it more of just gaining market share kind of a strategy there?
Okay, good question. I think the first part is I'll give you the numbers. So premium product has grown by close to 20% last year, which is significantly higher than the growth of base cement. Second is, even if I were to look at the contribution of premium products to the overall mix, it's gone up from levels of approximately 25% of trade sales to over 27%. So that clearly tells you how the performance of premium products is in the market. This is actually being driven by us. We would like to believe that in terms of percentage contribution of premium products, ACC would be amongst the relatively higher, better placed companies. As far as commercials are concerned, there is a significant difference between the EBITDA per ton of premium products and base products. Yatin, would you like to comment on the numbers? Yeah, no. So there is a commercial. One is obviously when you're looking at premium products, you're also looking at addressing specific consumer needs, but also there is a significant positive emergence as you keep selling more premium products.
Got it. So, but can you just quantify in terms of pricing? Maybe EBITDA you may not want to comment, but from pricing point of view,
It'll be about anywhere between 30 to 50 rupees a bag higher than base cement, ballpark.
And this is finding fair acceptance with consumers and all.
Yes, it is.
Okay, great. So thank you so much for your.
Thank you. We have the next question from the line of Ritesh Shah from Investec. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Couple of questions. Sir, first is how should one look at the company's incremental capital allocation and the growth optionality? I think the parent is quite, basically if one looks at the commentary from Holcim, they are quite clear on delivering growth, bolt-on acquisitions, as well as things on the solutions and product side. Sir, how should one look at the Indian entity specifically? We have brand, we have cash on the books. But when it comes to growth and capital allocation, sir, how should we understand that?
Yeah, Ritesh. So this is Yatin, and I'll try to answer your question. Well, capital allocation for us, I think pretty much the tonality is similar to what you see, our parent Holcim saying. Growth is the area for us, area of focus for us in all our actions. We do have a decent amount of cash on our balance sheet, and you see us expanding significantly now. The Ameta project is underway. Hopefully, it will see the light of the day sooner rather than later. We have more capex plans in the pipeline. Capital allocation, the capital is being kept for those pursuing those growth plans. Bolt-on acquisition opportunities in the market, something that is always on our mind. We keep our ears and eyes open. I would not want to comment anything more than that. But trust me that, growing and expanding is the core thing that we chase day in, day out. And along with that, the capital is not only for growth. We spoke about ESG. Sridhar has spoken enough about it. We are putting money behind, what we believe is right. We are putting money behind efficiency projects that we are driving across the organization, and that also add to the overall Parvat journey. So capital for us, I think we need to do all the right thing for business, capacity, ESG, and efficiency, all three of them.
So just to take this forward, but how should one look at it beyond the announced projects? You indicated that focus is on growth, but the balance sheet is too sweet to actually basically to make something out of it. Or if I have to put it the other way around, there have been recent amendments on MMDR, which indicates that if you have a historical lease and if you don't put it to use, it is something which will actually be taken back by the government. So when we come across such situations, what is our philosophy on the growth? Like give back the lease back to the state government, or go ahead and expand?
No, so we are very clear that we want to expand. If you have seen the proof of concept in the last 2 years is basically whether you look at expansion in Sindri, Tikaria, Ameta, or WHRS or Salai Banwa. So we are very, very clear that wherever we have limestone deposits, we intend expanding, and we are also actively scouting and scouring certain geographies for more limestone deposits in order to grow. So our parent company clearly believes that India is a growth story, and they are committed to investing in India to grow, whether it's by virtue of capacity, whether it's by virtue of investment in ESG, whether it's by virtue of investment in RMX, whether it's in virtue of investment in brands.
Okay. So my second question is on limestone. Just wanted to understand from a sustainability point of view, what percentage of our leases could actually potentially face expiry by 2030? And the recent win that we had at Kannur, how does it fit on overall scheme of things? To my limited understanding, I think we had certain limestone issue at Madhukarai lease. Is this something which is an offsetting variable to that? How should one look into this aspect of limestone and sustainability?
So first of all, if I were to look at it, Kannur is an independent thing. It just basically secures limestone for Wadi for a few decades to come. So that's a completely independent thing, and we've basically been declared as successful bidders for the same. So as far as the other plants are concerned, we don't see a limestone issue, so as to say, per se, across the plants. Madhukarai is a completely different issue. Yatin, would you like to comment on Madhukarai?
Yeah. So Ritesh, Madhukarai limestone, Madhukarai, we took that, impairment last year Q4, basically on account of, the process that we were following, and the economics of the entire clinkering process that we had at that location. It was not a question more of limestone, it was more about the economics of running the clinkering unit. And considering the entire supply demand situation in that part of India, that was the decision that we took.
And sir, on lease expiry by 2030, at a company level, how do we see that?
We do not see that as a stress. We do not foresee any issue there, any issue in that. I think all our integrated units, are fully covered for, the limestone availability for quite a long time.
Yeah.
So that is not a headache for us.
Sure, sir. Thank you so much. I'll join back the queue.
Thank you.
Thank you. We have the next question from the line of Rashi Chopra from Citigroup Global Markets India. Please go ahead.
Thank you. Most questions have been answered. Just on cost inflation, not from a efficiency standpoint, but more from a core point of view.
Sorry, your voice is... Your voice is...
Rashi, we cannot hear you. Could you come closer to the mic, please? Rashi, we are still not able to hear you.
Now, can you hear me now?
It's a little much better. Could you come closer to the mic?
Sure. This is the best I can if you can hear me.
Can the management hear Ms. Rashi?
Yeah, I think you can. Yeah, madam, please ask us your question. I hope we are able to hear it. Yeah.
Thank you. Just on cost inflation from a coal petcoke standpoint, where do you think the next quarter, or Jan to March quarter, is going to settle, and the following quarter is going to settle for you specifically?
It's Rashi, this is one question. We wouldn't like to speculate on that because you're aware of the volatility in the overall fuel space. So really, I wouldn't like to hazard a guess or give any guiding statements or any forecast as far as fuel prices are concerned. I think from a strategic standpoint, we are very clear that we will not speculate, and we will do back-to-back buying, and so that we are in a position to capitalize on any opportunity that may come up. And second thing is that we have invested in ensuring that our plants are flexible in terms of the kind of fuel that they can basically use. So these are the two aspects that we are looking at as far as fuel is concerned, but very difficult to forecast or predict which way it will go.
Got it. Okay. Thank you. That's it. Thank you.
Thank you. We have the next question from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi. Good afternoon. Thanks for the opportunity. So my question was more on the global strategy of 2025, which the parent has announced a few months back. So in that, there's a focus to grow the sustainable solutions business, and as in the solutions product business, and actually the cement as a piece of the business is actually targeted to kind of become relatively smaller. So firstly, what are the kind of opportunities you think you have to kind of launch these products which the parent has recently gotten into, like roofing solutions and all? And secondly, in terms of the cement expansion, so this focus on cutting down on CO2 footprint plus making cement in the overall pie smaller, could it impede newer investments in India for you?
So first of all, I think as far as India is concerned, we see a huge headroom for growth in cement as well as ready-mix concrete. Because unlike the developed world or countries like China, India is highly under-indexed as far as per capita consumption of cement is concerned. So very clearly you will see investments will happen both in cement as well as RMX going forward. You also see the proof of concept is the kind of expansion plans that we basically embarked on. Second, as far as products and solutions are concerned, as of now, we're focusing on waterproofing solutions, plasters, and admixtures. So I think each market is very unique, and this entire building material market is fairly localized. So if at all, if there are any learnings of products that can be picked up from the global markets and brought to India, we surely will do it. But currently, we are focusing on these three verticals. It's a very small vertical for us today. But the intent is to invest this and make it meaningful. But to answer your question, cement and RMX will continue to be a dominant part of ACC's portfolio in the foreseeable future.
Sure, got it. But also my related question was that, because the parent is focused on reducing the CO2 footprint, and cement, as you know, is still seen as a polluting industry.
Yes.
So could it, in that context, even though I agree there is potential for growth in India, but could it make approvals difficult for expansions?
No, so even within cement, there is a lot that needs to be done to reduce the carbon dioxide footprint, for emissions, whether it's in terms of the products that we have, whether it's in terms of the technology that we use in plants, whether it's in terms of, the alternate fuels that we use, whether it's in terms of the waste that we use in our plants, whether it's in terms of the footprint that we optimize to reduce the time that vehicles spend on the road. So even within cement, without comparing cement, concrete, and products and solutions, even within cement, we believe that there is a lot that can be done and that will be done to basically reduce the carbon dioxide footprint going forward.
So you don't think it will at least be difficult to get approvals at a parent level for these expansions then?
No, not at all.
No. Amit, the group is committed to grow in India. Cement is going to be the engine of growth for India. So there's not even an iota of doubt on that.
Yeah.
Sure. Thank you. And lastly, on the new grinding unit which you are planning, what could be the rough timelines for that?
Which one?
Amit, which grinding unit?
The UP grinding.
Sometime around Q1, Q2 next year, we should see that plant really firing.
Okay, sure. Thank you. That's all.
Thank you. We have the next question from the line of Satyajit Jain from Ambit Capital. Please go ahead.
Hi, good afternoon. Thank you for the opportunity. A couple of questions, one on capital allocation, follow up to previous questions. When you look at growth beyond the Meta, do you have brownfield optionality across your portfolio, or the next phase of growth beyond a Meta would also be largely greenfield? And partly it is to tie up with the huge auction premium of 190% that ACC has paid for Navalgarh. And given the high ROC target of 10+% that Holcim actually talked about in the capital markets day, what is the thinking there in some of these high premium acquisitions? Does the management believe that certain things will play out and these acquisitions will ultimately generate the return above the hurdle rate that Holcim has? So that's the first question, and come to the second after.
So let me answer the first question about capital allocation and what the future projects could look like. Right now, we are processing a lot of options in terms of expansion plan, and there would be a combination of green and brown. We would not want to comment on that. As Sridhar mentioned, securing limestone reserves and putting our current limestone reserves to use is the key priority. And surely, Meta is just a start. Moving to your second point about the premium that we have paid, maybe I would request Sridhar to comment on that.
So we believe that, it's of strategic importance to us, and I don't think there are too many limestone deposits left in that area. So given the strategic importance, and limestone is a scarce commodity, we all know that. So given the fact that it's of strategic importance and there is certainly going to be a supply constraint of limestone there, we feel that that's a strategic choice to make, and which is why we've stated our intent of making that choice.
And just to add, Yatin, again, from a commercial perspective, we are pretty clear that, even with this premium, obviously, we are in the business of creating return for our shareholders, and we will not let go of that agenda.
Yeah.
Okay. So thank you. Secondly, on the MSA, the company's share in Rajasthan before this Navalgarh actually comes up in 2 years is extremely low. Ambuja's share is significantly higher. Is management looking at increasing share in some of these markets where the current share is low? And if that happens, how does the MSA work? Would Ambuja get compensated in some other markets? if ACC markets some products in Rajasthan? That's the second question.
So specifically on Rajasthan, I think we have between ACC and Ambuja, we have 3 units. We have Lakeri for ACC, we have Rabari Awas for Ambuja, and we have Marwar Mundwa, which has just got commissioned a few months back. The idea is to basically leverage all the 3 plants to maximize capacity utilization and minimize logistics costs for both the opcos. And that is going to be the guiding principle of MSA between both the opcos wherever we operate.
Yeah. And just to add, Jatin again, there is nothing that needs to be compensated in MSA, and the whole design of MSA is incremental margins to both the companies. So it is only after the exhaustion by one company that it is offered to the other company. Hence, the mechanics of the MSA operations are very clear that it is incremental to both.
Okay, thank you. Thank you so much.
Thank you. We have the next question from the line of Pinakin from JP Morgan. Please go ahead.
Yeah, thank you very much for the opportunity, sir. I have 3 questions. First, just to dig deep on the capex. So one of the key investor pushbacks over the years has been that ACC and to an extent even Ambuja have not really invested in growth, and even as the cash keeps on accreting. Now the Ametya project is welcome, but can you give us more concrete numbers in terms of the outlook for capacity addition over the next 3 years or 5 years? What kind of growth can we see? What is the volume target in terms of capacity? Because many of your peers, in fact, all your peers have given out multi-year capacity addition project timeline.
10 million over the next 5 years. 4 months.
Yeah, 50 million.
Okay, the strategic intent is to move from current levels of about 35 million to anywhere between 45 to 50 million over the next 2 to 3 years.
So, 45 to 50 million tons from the current 34 million tons, right, sir, over the next 2 to 3 years?
Yes.
So that will mean that more project announcements should come through post the Ametya expansion.
Yes, absolutely. Once it is done, when we do our final evaluation of all the investment opportunities, we will be coming up with our next wave of expansions.
Thank you very much. So my second question is on cost. Now, we obviously appreciate that the commodity pricing environment is extremely volatile given what's happening with energy prices. But if we were to assume that energy prices remain where they are, basically coal, petcoke and diesel, and you have Project Parvat and MAS going on, do 4Q costs reflect peak, or will costs even move higher, or will they move lower if, depending on how these variables interact?
Right. So could you please articulate your question again? Sorry, we missed the last portion of your question.
So basically, if we assume that pet coal, coke and thermal coal prices don't change for the rest of the year, you will have tailwinds from your Project Parvat. So if we take Q4 cost as a starting point, will cost in CY21 be higher versus 4Q, or will it be lower?
So I would just say, this is pretty much it's a pretty hypothetical question. I understand your question, but we are not
we really can't speculate
that which way the year is going to be headed. Yes, we are at the peak of cost, but let us see how it plays out, and we will react to that.
Understood. And my last question is on cement prices. Can you give us a sense of what happened in your key markets in Q4 and how prices are in the current quarter? Because obviously it seems that consolidation benefits did not flow through to the industry in terms of cement prices on the ground in the previous quarter. So just trying to understand, have things changed or they remain as lackluster?
Yeah, so difficult to comment on the future, but in terms of what happened last quarter, the price increase was muted, and it was grossly insufficient to really mitigate the impact of the fuel price increase. Now, this is one area which really cannot speculate on the future, whether it's the input cost increase or whether it's the price increase, really difficult to predict as of now. But yes, in the last quarter, the pricing increase for us was significantly lower than what the fuel cost inflation was.
Thank you very much, sir. Thank you for the answers.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah. Hi, sir. Good afternoon. Could you please explain the CapEx or break the CapEx for the central market expansions and how much of that is pending, and what do you see the CapEx outflow for this year and next year?
Sorry, so you want the breakup of the capital allocation for the central market project? That's what you asked?
Yes. I think the total project cost was 3,000 crore. How much of that is already spent and how much is pending?
So Rajesh, this is a work in progress for us. Yes, it was. We had an estimate of in the ballpark of 2,800 crores. But the world has seen a lot of inflation. There have been some areas for us to attend to. So there is a tad bit higher amount that we are looking at right now. But I would park it at that right now. We are not, giving any new number. But we are executing the project as the fastest speed possible. Take it from us.
Okay.
What was the second question, Rajesh? If you could come back on that.
So, how much capex would we spend this year? Because what we understand is most of the spending projects would be operational this year itself. So we want to understand how much of the capex is to be executed this year.
So again, if you look at our last 3-year capex from a level of around 400 odd crores, we are in the year 2021, we were in north of 1100 crores. We almost tripled our capex amount. And, if you were to pick up the entire essence of what we have been saying, investment in capacity, in ESG and efficiency is the core. I would again not hazard a number to be put on the table, but that is our number one priority.
Okay, and the timelines for the two grinding units and the integrated plant?
So Tikaria is near about completion. As I said, Ameta, both the integrated unit and grinding unit should be operational by September, October. Salai Banwa should be operational towards the end of Q1 or early Q2 next year.
Okay. And on the project Parvat, you mentioned that over last 2 years versus CY19 to CY21, you have seen 300 rupees contribution on a per ton basis, right? So that is a margin improvement that is reflected in the numbers. But if I look at CY19 to CY21 margin expansion is close to around 230 rupees. So would that mean that you have faced other cost inflation or pricing pressure, whereby excluding the project Parvat benefits, your margin would have contracted?
Rajesh, you are absolutely right. Margins is a sum of many small parts. Parvat is one significant piece, that is not the entirety. So price and other inflation factors, you rightly said, are the other impacting factors.
Okay. And on the AFR, you said you are expecting to double it or to around 15% by 2025?
That's correct.
Okay.
You got it right.
And last question on the capex again, you are saying that over next 3 years, you are targeting total capacity of around 45 to 50. So this is what you are looking at to be total commissioned capacity over next 2 to 3 years?
That's correct.
And which markets would be your focused market over next 2 to 3 years?
See, from a strategic standpoint, given the market attractiveness and what we believe is our right to win, East and Central India will continue to be focus areas for us going forward.
Okay. And these capacities which are coming up in East and even Central market, yours and other companies, do you believe they may have some pressure over next 2 to 3 years in terms of realization?
No. So again, to answer this question, first of all, at an India level itself, India is highly under-indexed on per capita consumption of cement as compared to rest of the world. Within India, if I look at it, East is the most under-indexed as far as per capita consumption of cement is concerned. So that itself, we believe, gives us huge headroom for growth in the coming times in the Eastern markets. And here we are committed to a long-term play in India. So the short-term blips really don't matter. We strongly believe that both East and Center are poised for growth, given the per capita consumption of cement in these areas being low.
Okay, great, sir. And this would be a mix of both organic and brownfield and greenfield expansions, Central and East markets?
That's correct.
Okay. Great, sir. Thank you. I'll come back and to you. All the best.
Thank you. We have the next question from the line of Sanjay Satapathy from Ampersand. Please go ahead.
Sir, most of my questions have been answered. My question relating to market share. So how do you really see your market share shaping up in the near to medium term? Will it be entirely driven by the capacity, or there is something more to it?
No, so it will be driven by capacity, primarily also investing behind the brand to basically gain share.
And as far as margin is concerned, ACC, of course, has done a good job, but is there any significant scope to bring down the margin differential with other leading players?
So as I said, our stated intent is to also really be the best as far as performance benchmarks are concerned. We strongly believe that Parvat is a journey, and we will continue to look at all elements of the value chain to really bring down the costs. That's a journey which is going to continue in full earnest even going forward. We understand there is a gap, and the entire intent is to bridge the gap over the coming few years.
Yeah.
Would that be the end of the question, Mr. Satapathy?
Maybe you can move, Kripal.
I think he's offline, I guess, so must have got disconnected. Yeah.
Sure. We'll move on to the next question, sir. We have the next question from the line of Kamlesh Bhagmar from Prabhudas Lilladher. Please go ahead.
Thanks for the opportunity, sir. Mr. Akhoury, I had one question on the part of your capex. So, like if we see Ultratech, your leading peer, and if I compare your capex, like say our capex is even lower than their maintenance capex. And we have even in ACC we have a large greenfield project which we are doing. But even say if we see this year 600 crore we have spent, that is around 5% of the total capex cost. And apart from that, even going forward, though we have guided that in Ambuja we want to increase the capacity to 50 million ton, and even in ACC we are talking about that. But the way other peers are working on their capacity announcement or the giving orders to the equipment supplier, we are nowhere there, sir. So that is not giving the visibility on the side that how committed we are on the capital expansion side, capacity expansion side. No doubt that under your leadership things have changed tremendously. But on the capacity expansion, honestly, we are not seeing the things on the ground, at least on the announcement or real execution side.
So, Kamlesh, this is Yatin. Before I hand it over to Neeraj to respond, let me first make it very clear, on this call we are responding to what we are doing in ACC, and Neeraj is here, we are talking about Ambuja also. We will stay clear of commenting on, how we look versus others and etc., etc. We have clearly stated, if you look at our performance over the last number of years, I think the proof of concept is already there. Significant increases are happening in our capexes, and we are committed to do more. I think Sridhar has made some statements clearly indicating, significant investment, whether TSR or capacity, etc., etc. And I would now request Neeraj maybe if he wants to comment on the other point.
I think Kamlesh, I hear what you are saying. Only I believe, Kamlesh, there is also a sense of discipline of announcement with ACC and Ambuja have, which is far more robust and far more real than many other announcements that we also hear in the industry. So when we say we are going to expand, Kamlesh, it will be only after a proper approval process, both from the boards as well as internal working. Yeah, that's part of work. Part number two, Kamlesh, I think so far, if you see whichever announcements we have made, we have accelerated those projects, which is why you saw Sindri or Tikaria in ACC. Sindri, at least in ACC, I believe, and I hope what I'm saying is right, is one of the fastest projects ever executed. Yeah. And same, I am sure, when we come with the trial production of Tikaria, even looking at the Corona year, it was one of the fastest projects to be executed. Yeah. there are projects, at least one project which Ambuja has announced, the last announcement, where we are waiting for the environment clearance. Once we get that, which has been delayed because of Punjab elections and so on and so forth. Once we get that, you will see the actions in the same speed. I assure you, add to this, not only Kamlesh, to you, but to everybody in this call, that once we have committed the capex to be done, it will be done only after all internal decisions have been taken and all internal clearance is there to execute it at the fastest speed as possible. But I hear you, Kamlesh, I hear you.
Yeah. And lastly, like just continuing on the capacity expansion only. So, like in the near term or over next 1 year, how much capacity are we looking to expand? No doubt you have guided your 2025 capacity expansion plan, but at least like say on the near term side, like 1 year is a good.
Clearly stated between Tikarias, between the current projects which are work in progress, we should be close to 40 million tons over the next 14 to 15 months.
Great, sir. Thanks a lot.
Thank you, Kamlesh. Kripal, maybe.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Kripal Maniar for closing comments. Over to you, sir.
Thanks, Mike. On behalf of ICICI Securities, we would like to thank the management of ACC Limited for providing us this opportunity to host the call. And I would like to thank all the participants for joining the call. Thanks everyone.
Thank you very much. The members of the management and Mr. Maniar. Ladies and gentlemen, on behalf of ICICI Securities, that concludes today's conference. Thank you all for joining us, and you may now disconnect your lines.